There is something really satisfying about catching a trade just as it's reversing, because you can get a great risk to reward ratio. And if you get in early enough, you can also catch a really nice long swing and the majority of that swing. But there is one danger with trading reversals, especially if you are a beginner trader, and that is distinguishing between what's a genuine reversal or what's just a pullback. If the market's just having a pullback and you're constantly seeing reversals, then you're going to be losing a lot of money. So in this video, we're going to take a deep dive into reversal trading for beginner traders. We're going to go into what reversal trading even is, how to spot the difference between a genuine reversal and just a pullback, how to determine when a reversal might be on the cards. I'm going to share with you my favorite tools for trading reversals. And if you make it right to the end of this video, I'll also share one of my favorite key levels for trading the US 30. This is where reversals often happen. So if you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, hit subscribe to Thinkmarkets now. So we're on Thinkmarkets. This is where I do my technical analysis, and we're looking at the US 30 on the 5-minute chart. A reversal trade is when the market's going from a downtrend to an uptrend and you're trying to get a buy position as it turns, or it's going from an uptrend to a downtrend and you're trying to get a sell position as it turns. So for example, we're in a downtrend here, and this is when the market starts to turn from a downtrend to an uptrend. So you'd be looking to get a move around about here. And then if you're trying to catch a reversal here, you'd be looking for a sell position towards the top. So obviously the great thing about this is the really nice risk to reward ratio, the fact that you were right about the market changing direction, which can obviously feel quite satisfying as a trader, and also the potential to get greater profits from the trade because you're getting in early and you can let it ride out. But as you can see along the way, you do get pullbacks in the market, and these can make it tricky to distinguish as to whether it is just a pullback or whether it's a genuine reversal, because when you're actually in the trade, it can sometimes feel like the market is reversing when you get a big candle like this moving the opposite direction. But can you imagine if you got into a trade here and then got out here because you thought that it was reversing, and then it carried on moving all the way down? Obviously, getting confused between reversals and pullbacks can be an expensive game. So I'm going to show you the tool that I use to help me with this. It's called Heikin Ashi. If you go to Thinkmarkets here, where the candlestick symbol is, if you click on it, you'll see Heikin Ashi is down here. If you click on this, can you see how, although they look similar to normal candlesticks, they also look a little bit clearer? It looks a little bit clearer as to whether you're in an uptrend or a downtrend. That's because although it's similar to normal candlesticks, it uses a slightly different formula which takes an average, so it looks like it's smoothing out the trend effectively. In Heikin Ashi, you've got three main candle types. You've got bullish momentum, bearish momentum, and indecision. So the first rule is never make a decision on an indecision candle, and there's a really good reason for that. Indecision candles appear in pullbacks and also at the start of a reversal. So what we're looking for is the market to actually change direction before we start looking for an entry. The bullish momentum candles are these green ones. They've got a flat base and they've only got wick at the top. The bearish momentum candles are these red ones. They've got a flat top and only wick at the base. And then indecisive candles can be either color. They've got wick at the top and at the base. So can you see that as the market's changing direction, as it's reversing, you can see a cluster of indecisive candles. But also, as the market's having a little pullback, or a big pullback in this case, you can see a cluster of indecisive candles. But on the whole, when the market's moving with momentum, you tend to see one main candle type. Now, obviously, it's not perfect, so I can see one straight away here, where you can see a pullback that did show bullish momentum. But on the whole, the 5-minute time frame is actually quite good on Heikin Ashi. This doesn't work well on all time frames. So that's the first thing that I'm going to say. It works quite well on the 5-minute. It works really well on the 4-hour and on the 1 day, but it works terribly on the 1 minute and on the 1 hour. I'm going to show you, just so you know. If we go to the 1 minute now, just go back to where we were, can you see that in this downtrend, there are so many bullish momentum candles? So if you're using it on the 1 minute, you're going to get yourself confused because it's going to look like the market's changed to the upside, but really it's just having a pullback. And that's why it works so much better on the 5-minute, because you can see very clearly when the market's in an uptrend and when it's in a downtrend. But also good to be aware that it's not perfect. So there will always be times when you get a particularly big pullback and it does look like momentum has changed. So we're just back on normal candlesticks now, and I'm going to show you another tool which I like to use to help me distinguish between a pullback and a reversal, which is obviously useful if you are a reversal trader, and that's this measure tool here. So can you see this measure tool? It looks a bit like a ruler on Thinkmarkets. If you click on this, you can measure the pullback. This can help you to hold your nerve if you are in a trade and you're not sure whether the market's actually reversing or not. And also it can help you to decide whether the market is likely to be making a reversal. So how you use it is you just select the ruler tool and then you click on it and you measure the length of the pullback. So that one's gone all the way up to there. And if you click on it, it will hold. So if you're looking at the percentage here, I usually say around 25% is okay. If it goes any higher than 25%, then you're looking at more of a reversal. Now, this is going to really depend on the market that you're trading. So the best thing that you can do if you're not trading the same markets as I am is to make sure that you really back test this. So make sure that you measure the pullbacks of the market you're trading and see what the average size is and what the maximum size is of a pullback. And then you can use that going forward. So if you want to use the back testing software on Thinkmarkets, it's called the Trader's Gym. You can find it along the side. It looks like a dumbbell symbol. So as promised, I'm going to tell you my favorite place to look for reversals, and that is on key levels. So you have to understand the right key levels for the market that you trade. And these are often really great places where lots of traders put their orders, and you can often get some really nice reversals at these points. Doesn't always happen, but it's a great place to watch out for them. So my favorite key level for the market that I trade, which is the US 30, is the highest and the lowest point on the 1-minute chart after a news release. So say, for example, when NFP is released on the first Friday of every month, on that first 1 minute, you draw up the highest and the lowest point of that candle, and this becomes a great place where a lot of traders put their orders, and often you do get reversals over the next week or two. It also works on different news events as well, but it really depends on how dramatic the news is. So now you understand the basics of reversal trading for beginner traders. We also briefly touched on support and resistance when we looked at that key level. So in a future video, we're actually going to go into support and resistance and key levels in a lot more detail. So if you want to make sure that you don't miss that video, hit subscribe to Thinkmarkets now. And if you also hit the bell button, you'll be notified when any upcoming videos are released and you won't miss any of them. Also, if you got some value out of this video, hit the thumbs up button before we head off.